That's hilariously hilarious. Good graciousness. Great job. Great. Oh no! Oh no! Funny. I wonder when my group is going to want to work on that. Probably after tomorrow's part of the test. Because they want to spend today studying for the test. Dude, giving companies the option to use LIFO or FIFO is just so ridiculous. It just completely messes everything up. The only reason they would use LIFO or FIFO is just so they could, like, save money on taxes or whatever. Like, it literally has no freaking difference. What is this? The rate of sales growth has decreased. What is the inventory turnover? I know how to do inventory turnover. What's useful in assessing profitability return on? Hello? Wait. Oh, operating on profit. Ooh. Here, which of the following would require some 8K? The answer is C. So, the answer is the 8K has to do with major acquisition. Audited financial statements. Are you kidding me? Why? Oh wait, I'm stupid. Actually, the answer is C. It's bankruptcy, major acquisition, and change in management control. Why am I dumb? I could have gotten that right. No, shut up. 10K reports are annual filings made by the company with SEC primary responsibility. Management. Which of the following combinations of accounting practices will lead to the highest recorded earnings and inflationary environment? I love the LIFO and FIFO question. Okay, so Yeah, I was able to figure that out pretty easily. Oh yeah, one of the LIFO and FIFO questions I got wrong because I was an idiot, not because it was actually hard. Which of the following best describes the current ratio? C, liquidity ratio. So current ratio is liquidity, so yeah. I hate this LIFO FIFO. This one, I answered B. Wait. No, this was the hard one. Using LIFO, using LIFO, the answer is A. So all of them except for 3. Using LIFO instead of FIFO lowers the current ratio. Why does that? Basically, the assets get smaller relative to the liabilities. Somehow. It increases the inventory turnover. And it increases the debt to equity ratio. And does not increase profit margin. I answered B. The answer was A. So basically, I thought it didn't have anything to do with debt to equity, but actually, does. Okay. Fine. Well, I'm going to memorize all the effects of LIFO and FIFO later. Oh, I still have to do the memorization thing. Dang it. Come on. Basically, it lowers current ratio, increases inventory turnover, and it increases debt to equity ratio. Yeah. Which of the following industries would you expect to have the highest inventory turnover? A restaurant. Easy. If a company's current ratio increases from 1.2 to 1.4 from 1 year to the next, and the quick ratio decreases within the same period, what does that even indicate? It indicates that the inventory management should surely be examined. Like basically, the one liquidity ratio went up and another liquidity ratio went down, right? And the only difference between those is inventory, and that's why that's the answer. Okay. The gain or loss from disposal should be reported as a special item after continuing operations and before extraordinary items. Changes in account balances during 2012. There it is. I loved this question. I'm not going to do it again. I was able to figure it out there, so I should be able to figure it out again if it comes up. If a firm consolidates subsidiaries that are not wholly owned, that would be termed minority share of earnings. Again, that question. Are you kidding me? Simcox Company. Oh my. What was this one? For this one, you just have to distinguish between an income statement items and cash flow statement items. And guess freaking what? You didn't even cover chapter 12, 10. Well, I guess technically if you read chapter 4, you should know what income statement items are, which ones are not income statement items. Who knows? Whatever. Stop saying whatever. I got this one wrong because it's a LIFO type of question. And also, guess what? No. This one, I was not stupid on this question, right? I was not stupid. Okay, so basically, you must know that LIFO creates a higher inventory turnover, according to that other question, right? And it creates a higher current ratio? No, FIFO creates... No. So LIFO creates a lower current ratio, doesn't it? Is that what the other question is? I don't freaking know, whatever. I'm going to study it later. And then this one, I should not have gotten it wrong because I'm so stupid. I accidentally... This is the one thing I remember about FIFO, which is that it results in a higher profit, not a lower profit. I'm so stupid. I think I read this wrong. Like, I thought this said higher or something. I don't know. Who freaking knows? God. Man. I don't think I would have gotten this right even with that. I don't know, maybe I would. Maybe I wouldn't have gotten this right even if I wasn't an idiot and picked A, which is obviously wrong. But yeah, I'm just going to read later when I'm studying that, I'll read through the list and then see if it matches up with all these questions. It should, obviously it should. I don't know why it would. Who's responsible for the preparation and integrity of financial statements? Management. Garlic Company. Pretty simple stuff. I can figure that out. God dang this question. Why did I get this wrong? Oh, it's because we never learned about this at all, did we? I guess it technically was in the textbook. I don't know. Like stuff like... Oh my god, are you kidding me? I said the cash is the largest, but actually, I guess they give a lot of loans, so actually the largest one for them would be accounts and notes receivable. God. But seriously, how the heck was I supposed to know that anyways? It seems very counterintuitive. But actually, yeah. If you just think about it for one more second, you realize the bank gives out lots of loans. Dumb person. Wait, account receivable. Why would it be accounts receivable? Accounts receivable means that you bought something from the bank and then you owe them money. What the heck? How does that make any sense? Okay, fine. Shareholders' equity consists of what three components? Contributed capital accumulated other comprehensive income and retained earnings. Lots of cash from financing activities. Oh yeah. So for this question, he never gave us the points for it, did he? Oh, maybe that's why he gave everyone 2 points instead of just 1. Because for this question, he went over it in class and my answer was the correct answer. Anyways, 27. They're selling long. Oh yeah, this was a confusing question, but I still got it right. That's funny. By the way, this is a cash statement thing, which is from chapter 10. Good God. But I still got it right, so why am I even mad? I shouldn't even be mad. Like, technically, I shouldn't have gotten the LIFO and FIFO questions wrong. That was part of the textbook. That was in the textbook. I should have read that more closely. He literally said that LIFO and FIFO... Wait, I don't know if he did, but... Like, the bank question, though, I don't know how we were supposed to know about that. That's kind of specific. They're getting money from financing. They're getting money from investing activities, selling long-term assets, and borrowing money to fund operations. Financing activities involve vertical analysis. What percentage is assigned to gross profit? All you have to do is divide it by the net sales. It's 3/5. 3/3. 2/3. Stop. What is IFRS? It is principles based instead of rules based. Sarbanes. Is it even called Sarbanes? Yeah, it applies to public companies. The SEC is responsible for overseeing external financial reporting by publicly traded companies. Assets turnover ratio. Here's another question that was from not from the chapters that we covered. It was from that's from chapter 8, which I haven't really studied in much for a while. How efficiently a company uses its assets to generate sales. How efficiently a company uses assets to generate sales. What is this one? That's a ratio. All I have to do is study the ratio. Which of the following statements is not correct? What was the correct answer on this? No, for this times interest earns. D is incorrect. Okay. 36 coming. And then for this, I was an idiot. Okay, so the LIFO and FIFO thing, again, I got everything right for this except for one. Okay, I'm going to look at my answer. Because, well, I'm going to just kind of think about it logically so I can maybe come up with the same thing. But yeah, I'm going to study the LIFO and FIFO thing later. But I got all of them except for one right, which was pretty good. So revenue, basically I thought about it this way. If you use LIFO, that means, I thought all in terms of the profit goes down. So I think that means that the cost of goods sold goes up. So if you use LIFO, revenue, no change. Oh, I'm not going to look at it. Revenue, no change, of course. Gross profit goes down. Cost of goods sold goes up. That's what I thought already. Profit goes down. Income taxes go down, right? And then cash flow, I said no change, did I? Actually, no. Cash flow, he says cash flow should go up because you'll be paying less taxes. So yeah, that's the only thing I messed up there. It's perfectly fine. Alright, I guess I'm done studying this. I didn't study it in much detail. I kind of want to just do whatever easy stuff we have before we go back to my dad's, and then when I get to my dad's, do the rest of the hard stuff. So there's actually 2 PowerPoints. Oh no, this is the one Word document, and there should be 2 PowerPoints, right? He went over a PowerPoint in class today, and I don't think it was this one, was it? Whatever, I can't be bothered to ask him for it. I'm just going to study all the stuff he laid out here. Valuation case 2, tax, inventory related problems, projections, fundamentals. Really, why am I such a waste of my life? Okay, fine. You know what I'll do? Easy stuff is to read this. This is easy. This is so easy, dude. This is freaking easy, right? Stop saying freaking. Hello? Is there ever going to be a test question from this tiny little document? Okay. Is there going to be a stinking text question about this? Dude. I guess it could be a test. I don't know. By the way, we went over 2 PowerPoints. The one class last week we went over this PowerPoint, and then this class we went over a different PowerPoint. Unless they're the same, but they had to have been different, right? No, they're not. Wait. Did we go over the same PowerPoint twice? Is that what happened? Oh, you know what? There was another document. There was another Word document we went over in class, but he never posted it, did he? Oh my god, are you kidding me? Okay, well, it's fine. It's perfectly fine. No, all I have to do, here's the shortcut. Remember, I took a Microsoft Office class, an entire class about it, and I somehow didn't realize. Where's the slideshow? Right here. You just click that button. You don't have to click slideshow. Well, we're gonna go through this. Oh, by the way, I think it's like 42 slides. 40 slides! This is hilarious. It says oh, this is the learning objectives. Idiot. I thought it just said definition and didn't know it's the definition. Oh my god. What is a business valuation? That's funny, you put a business valuation. Did my professor make this PowerPoint himself? I don't know. I thought he said someone else made it. Valuation is the practical process of determining the value of a business. Business ownership, interest, security, or intangible asset. Oh yeah, we had some corporate finance stuff where we had to come up with the value of a business, didn't we? Anyways, I'm glad I got 92% in that class. That gives me an A- in the class, which is not the best thing, but at least it's still an A. Anyways. And maybe if he grades on a curve, I'll get an A. He never said anything about grading. The professor sent a grand total of 2 tiny little announcements throughout the entire course. And I was perfectly fine with that. I'd rather have a neutral professor than a professor that's not the best, that kind of hinders my progress rather than just doing nothing. What exactly is being acquired? If buying assets and assumption of selected liabilities, it's an asset sale. If buying shares of stock or a partnership or membership interest, you are buying the equity of the company. Intangible assets are those that you cannot see, feel, or touch, such as franchise, trademark, patent, copyright, goodwill, equities, mineral rights, securities, and contracts. Focus today is on valuation of equity and the process of understanding some basics of valuation reports, guidance, the rules that have to be followed when preparing valuation reports. Do we have to memorize all the different things? There's SFE S1. Who are the people who want evaluation? Banker, business owner, tax and estate planner, the IRS, certified financial planners and exit planners, lawyers. How much is the business interest worth based on the specific purpose of the valuation? I love questions. Who can prepare a valuation report? A certified public accountant. What is AICPA and NACVA? What is those? There's accredited in business valuation and then certified valuation analyst. What is NACVA? You know what? I need to know what that is. What the crap? Is it NACVA? NACVA. What is that? The National Association of Certified Valuators and Analysts. And then the AICPA. It's weird how there's two different things. American Institute of Certified Public Accountants. It's kind of weird. So, I think so. Just any old certified public accountant can do it, but also you could get a specific certification as a CVA. Accredited in business, no, it says you have to be accredited in business valuation. And certified valuation analyst, non-CPA, business appraisers, IBA and ASA, investment bankers, transactional. Why prepare a business valuation? Common purposes include a merger and acquisition, litigation, and ownership dispute. Estate, gift. Does that mean estate tax, gift tax, and income tax? I think that's what it means. Divorce, dissenters' rights, shareholder oppression, employee stock ownership plans. Stock option plans, compensation structures, business planning. Why do you need to know the purpose? Purpose determines which valuation date to use. The standard of value, the fair market value, the fair value, investment value, or intrinsic value. The premise of value, going concern or liquidation. The level of discounts to take. If applicable, lack of control, lack of marketability. So here is the valuation process. 1. Understand the purpose of the engagement and the elements that will impact the conclusion of value. 2. Analyze the company's historical financial information, determine need for normalizing adjustments. 3. Gather information about the company or assets. 4. Gather information about the industry and economy. 5. Consider methods to use in valuing the company. Select the most appropriate method. Calculate the resulting values. Reconcile the values for those methods selected. 7. Apply discounts and premiums if applicable. 8. Write the report, could be oral report. 9. Ensure compliance with professional standards. Understand. Now it's going to explain every step in detail. That's awesome. Okay. Yeah, and he kind of said, he was talking to the class as a whole. He said he looked over two of our submitted group projects, and I assume he also looked at ours. He looked at ours, and he said for both of them, we looked at that they're perfectly fine, like they're really good. So like technically, we don't even have to do anything for the final draft. But he did make suggestions, so just in case, maybe he'll increase our grade a little bit if we make those changes. We'll have to look at that. Okay, understand the engagement. Understand the purpose of the engagement and the elements that will impact the conclusion of value. What is the purpose of the engagement? Who is the client? The name, number of locations, type of organization. What is being valued will determine what discounts to apply. Standard of value and its definition. Premise of value, going concern or liquidation value. Users of the report, whether or not and or which discounts are to be considered. Okay. Here's an example. We have the client name, Olive Garden Incorporated. Yeah, we definitely went over this in class. I'm not sure why, but wasn't there another PowerPoint that we went over? Either he went over the same PowerPoint twice, or he went over two different PowerPoints and only linked to one. I'm not really sure what went on, but we definitely went over this PowerPoint today in class, but I was barely paying attention the entire time. I'm sorry, but so boring. Oh man. Okay, type of entity, corporation. State of creation, Wisconsin. I had no idea that Olive Garden was from Wisconsin originally. That's pretty cool. Principal business location, Platteville, Wisconsin. Business interest valued. Standard of value, fair market value, premise of value, going concern, level of value, non-marketable, controlling interest. Effective date evaluation, 2014. Valuation purpose, marital disillusion? Marital disillusion? Okay. What is the correct valuation date? The valuation date is the specific point in time as of which the evaluator's opinion of value applies. Gift tax. Valuation date is date of gift. The estate tax, the date of the death or alternate, 6 months after selected. Divorce filing date, sometimes the other periods near the actual trial date. Sometimes before marriage and at the end of marriage. ESOP, usually a fiscal year, the end of company. Buy-sell agreement or planning, date set at the request of clients. Litigation may have several valuations immediately before, triggering event, and after event occurred as a way of potentially measuring damages. Now, there are 3 standards of value: fair market value, investment value, and fair value. Financial reporting. Fair market value, the price at which the property would change hands between a willing buyer and a willing seller, neither being under any compulsion to buy or sell, and both having reasonable knowledge of relevant facts. Investment value, value to a particular investor based on individual investment requirements and expectations. Fair value is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. Premise of value. An assumption regarding the most likely set of circumstances that may be applicable to the subject valuation of value. Subject. Two main premises of value: the going concern and liquidation value. Going concern, expected continuing operation. Company has trained workforce, operational plan, policies, and procedures in place. Liquidation value: orderly, liquidated over time to maximize proceeds, and forced assets sold quickly at auction, as in auction. Financial analysis. 2. Analyze the company's historical financial information, then determine the need for normalizing adjustments. Compare to benchmark industry data to see if company performs better or worse than the industry standard. That's kind of what we did in this class as a whole. That's hilarious. Balance sheets. Common sized, 5 years. Actually, he said balance sheet, you only need 2 or 3 years. Income statement, common sized and 5-year averages. By the way, our group projects didn't even have us do a common size analysis for the balance sheet. Anyways, and for the income statement for our group project, we did 3 years, of course, because that would take forever to do 5 years. Selected financial ratios are calculated for 5 years. Liquidity ratios, current ratio, quick ratio, leverage ratios, debt to equity, operating performance, gross margin, pre-tax margin, DSO, days sales outstanding, inventory days, payable days, asset turnover, sales to working capital. Look for unusual non-recurring trends, as these items will be taken out, normalized, of the earning stream or labeled as non-operating assets or like. For small companies, look for adjustments that may need to be made to financial statements to make them in accordance with GAAP and or comparable to the industry. Consider control adjustments if applicable. Gather information about the company. Information request letter asks for tax returns, financial statements, non-recurring items, including the financial statements, balance sheet, support, key employee resumes, organizational charts, top customers and vendors, product brochures, intellectual property information, etc. Company information document. Facts and management-based information about the company, its employees, vendors, and customers needed to help assess the risk profile of the company relative to industry. Site visit to client normally done to assess the company and its management, as well as to view the facilities to determine adequacy for future growth, must disclose and report at site visit. Gather information about the industry and economy. Industry analysis. And tell where the industry is headed and how the subject company fits in. What is historical projected growth for the industry, product, and customer segmentations, barriers to entry, level of competition in respect to market shares, cost structure, benchmarks, level of capital, and labor intensity, drivers of growth or decline in the industry. Economy. Purpose is to understand the effects of economic conditions on the subject company at both the national level and the company's market level. How those changes in interest rates, inflation, and the number of new housing starts affect the subject company. Don't forget local economy if it applies. Valuation methods to consider. Consider these 3 methods. To use valuing the company and select the most appropriate methods. Asset method, based on the fair market value of the assets net of liabilities. The market methods. Guideline public company method and the guideline company transactions method. Income methods, capitalized earnings method or discounted cash flow method. Consider all methods in report. Explain why you considered and used or considered rejected method. IRS requires you to consider. It says IRS requires you to consider all 3 methods. Wait, does it require you to consider? Oh, yeah, for a second I thought it said use all 3, not consider all. What if you just said, I considered it for about 2 seconds and I figured out what they mean by consider. Okay, at least it just explains it in detail. What is the asset method? It is based on the fair market value of the assets, net of liabilities. Note the difference between fair market value and book value. Most commonly used when the business is an asset-intensive business like a real estate holding company, generally not used in operating companies unless the company is losing money. Asset method is sometimes presented in valuations and represents a floor value for the subject company. Premise of value, important to the evaluation, going concern, or liquidation value, makes a big difference. Level of value obtained using this method, generally a controlling marketable interest. I don't even know what they mean by level of value. So you may need to apply discounts or lack of control and marketability depending on the facts or circumstances. How to calculate market to market. Mark to market. Adjust historical balance sheet to fair market value. Consider GAAP adjustments, fair market value adjustments, adjustments for excess or non-operating assets. Do we have to know how to do this? We would never know how to do this. Well, we wouldn't know how to make the adjustments, would we? The total value, you basically come up with the fair market value of the assets and the liabilities. So, market method, guideline public company method, and the guideline company transaction method uses multiples. Those look like just a bunch of ratios. Wait, price of what? Market price? The earnings price, the sales price, the earnings before income tax, depreciation, and amortization. Good job. Price the seller's discretionary earnings to derive a sale value of the company. Most commonly used if a larger company is being valued and there are good comparable companies out there, public or private, or if a small vanilla type business is being sold, such as a franchised restaurant or a dry cleaning operation, and lots of comparable sales are in the database, not used a lot for small to medium-sized businesses that I work with. Level of value obtained. Guideline public company method, marketable minority interest. By the way, they changed the name from minority interest to non-controlling interest, didn't they? Guideline company transactions method, private companies, marketable control interest. How to calculate. You may need to reconcile the level of value obtained by applying discounts or premiums based on the subject interest be valued. If a private transactions database is used, you need to determine if the data reported is stock or asset sale and adjust the result accordingly. Sometimes the resulting value indication either includes or excludes inventory. For example, you must be careful to know what reconciliations need to be made. Asset sale versus stock sale. Most small business sales are structured as asset sales, not stock sales. Buyer will acquire inventory equipment, and intangibles, while seller keeps cash and receivables and pays off debt. A valuation determines the value of equity, not specific items. Transactional databases used in marketing methods that are not guideline public companies could include asset sales and or stock sales. Assembled data treated differently in different databases. So reconciliations have to occur if you use several transactional databases. Example, BizComp's values exclude purchase of inventory, while IBA and Pratt's stats include it. Pratt's stats. Nice name. Asset sale versus stock sale. Cash and debt is usually excluded. Wow. future earnings of the company. You know what? Funny. And about 330 to 100 pages of other stuff. Nice. I skimmed over that so much. I don't know what parts of it are on the test. Oh. What else is there? I think the rest of them are just like problems and stuff. What about this? We never went over this. We never went over this one. Oh. Never mind, we did. Wait, what? We did go over this in class, but I thought this was the inventory related one. Well, I should be able to... Did it? For these, do you just project them based on their current rates? It's so weird how we like. I think we did go over this a little in class, I guess, so it technically counts. It's so weird how that's part of the test. What this? Did we go over this? Hello? A? Wait, this is the answers for case 6-1. Interesting. Problem 810. Okay. So the rest of it, I think, is just problems. I'm gonna be back later, probably in a couple hours or something. But knowing me, it's probably gonna be more like 3 hours. God dang it. Dang me. I went over the PowerPoint, I just skimmed over. I really don't know if that was good enough. Might look it over again, just like try to find. I don't know.